Good morning, everyone. Today we are going to start with a revisionary session on material and employee cost in paper 4 of Cost and Management Accounting. So I'll take up questions, practical questions, and through that only I'll explain all the concepts and as well as theoretical and practically. Now, material is a very important element of cost, which makes up the cost of any product, project, process, or operations. So there are certain important questions which are dealt with when we decide about material. If we manage the material cost effectively, most of the cost of the entire project or process or units will be managed properly. When we talk about material cost, let us say there are certain questions which should be answered properly. If these questions are rightly answered, the material cost would be properly managed. For example, what kind of raw material or material has to be ordered? When should you place the order? What should be the quantity you have ordered? And what should be the maximum level of the material you can hold? What should be the minimum level of material you hold? So most of the questions from material costs pertain to questions on EOQ, which is economic order quantity, as well as reorder levels, reorder quantity, as well as maximum level, minimum level, danger level, and average level. So it is all about managing the receipts as well as issues of material in the use of material. So let us take up questions here. Through that, we will try to understand the entire concept of material costing. X Limited is committed to supply 24,000 bearings per annum to Y Limited on a steady basis. It is estimated that it will cost 10 paise as inventory holding cost per bearing per month, and that the setup cost of bearing the manufacture is 324 rupees. So we get three important information from here. How much is the material bearings? Bearings is the material that we use. So 24,000 bearings will be used per annum. So X Limited is committed to supply 24,000 bearings per annum on a steady basis. Cost of inventory is 10 paise to hold the inventory. So holding cost means your storage cost or carrying cost. Holding costs, storing cost, or carrying costs. Holding cost, inventory cost, or carrying cost, that is one information that we want. And second is what is the cost of placing an order. If it is a manufacturing unit, you can also use a setup cost as in here. So placing an order or setup cost is 324 in this question, whereas holding cost, storing cost, or carrying cost is 0.10 per bearing per month. Okay, per unit per month. So the first question is what should be the optimum run for the size for the bearing manufacturer? Now here we talk about a concept which is EOQ and may also be parallelly drawn to EBQ. EOQ stands for economic order quantity and EBQ stands for economic batch quantity. So when you are manufacturing, you will decide on how much unit should be produced per run. So what should be the batch size? And if you are ordering, how many units should be ordered? EOQ may also be termed as reorder quantity because we assume that a person would be rational and whatever is most economical, that many units he will order. So reorder quantity should be always economic order quantity, as if you approach prudence and rationality. Now, when you place, let's just say, take an example here. If you require 12,000 units in 1 year, and whenever you have to place an order, cost of placing an order is, let's say, rupees 300 per order. So if you order how many units? Let's say reorder quantity is 1,000 units, right? So if 1,000 units are ordered, you will place how many orders in a year? Number of orders placed would be 12, right? Number of orders would be equal to 12,000 divided by 1,000. So you will be placing 12 orders in a year. So let us say 12,000 units a year is your annual usage, which can be either represented by the alphabet U or A. So how many orders you place is decided by your annual usage divided by quantity you order. So annual usage was 12,000 and quantity ordered was 1,000. So you will place 12 orders. Similarly, if cost of holding 1 unit per year, cost of storing, carrying, or holding 1 unit in 1 year for 1 year is given as, let's say, rupees 10. So how many units did we order? We ordered 1,000 units. So what will happen is we have 1,000 units with us. Gradually, they will reduce to zero. We don't allow it to fall to zero, but almost negligible. So then again, 1,000 units will be there in the stores. Again, it will fall to zero. So this process will go on throughout the year. So on an average, in the entire year, you will be holding 500 units, right? Average of 1,000 and 0, 500. Average of 1,000 and 0, 500, so on. So in the entire year, the average units held will be 500. How do we calculate that? So whatever the quantity we have ordered, on an average, we assume that we will be holding half of that. Why? Because there is an assumption that the consumption of raw material or consumption of material will be uniform throughout the year. So Q by 2 would be the units you will store. And if 10 rupee is the cost of each holding each unit for 1 year, so this will be your storage cost. So we have ordered 1,000 units. On an average, we are holding 500 units and 500 into 10. So our storage cost will come out to be 5,000. And as we have given 12 orders and cost of placing one order is 300, our ordering cost would be 300 into 12 orders. It will be 3,600. So if you look at a graph here, where on x-axis you have units ordered and on y-axis you take the cost, you can see that as the number of units ordered increase, your storage cost will go up, right? And as the number of units ordered increase, the placing cost will fall down. You can assume it to be a linear, or you may assume it to be whatever the function it takes. So as the number of units ordered increase, you place less orders. So if I had ordered 12,000 units in one go, my order would have been only one. So my ordering cost would have been 300. So total storing cost goes up as the number of units ordered increase, and total placing cost comes down as the number of units ordered increase. So we have to strike a balance between the two, a point where the total cost is minimum. This becomes the EOQ, or the reorder quantity. So we should order that many quantity where our total storing and total placing cost is minimum, right? We also have to incur material cost, but material cost is irrelevant. So if the raw material cost is 1 rupee per unit, no matter you order 12 times, no matter you order one times, you will be ending up spending 12,000 into 12,000 rupees. But the placing cost and ordering cost changes with how many units you order. So we will try to strike a balance, and we'll try to reach a point where the total of the ordering and storing cost is minimum. So this is also given by a formula, which is EOQ, which is equal to under root 2 into A is the annual usage, into O is the ordering cost, upon C is the cost of storing or carrying. So this is how we calculate how many units we should order at a time. So if we solve this question, that is their first question, what is our annual consumption here? A is 24,000. So you are supposed to supply 24,000. This becomes our economic batch quantity. How many quantity you will run per batch? So 24,000 is the annual batch, the annual production of units, which you have to produce in batches. So what should be the economic batch quantity that we will calculate? So A is the annual manufacture of 24,000 units. Cost of storing is 0.10 per bearing per month. So we need storage cost or carrying cost as storing one unit for 1 year. Here we have 0.10 per month. So we will be very careful in and taking care of this thing, that is it given per month, per day, per year, or what. So uniformity has to be there. So it is 1.20 per unit per bearing, or per unit per year. And then what is the cost of setup or ordering cost? It is rupees 320. So from the question we have found out, A is 24,000, cost of storing is 1.20 per unit per annum, and ordering cost is 324. So what would be the optimum run size for bearing manufacturer? EBQ is equal to under root 2 into A into O upon C. So it becomes under root 2 into 24,000 into 324 divided by 1 point. So if you will solve this, you will get 200 into 18. $3,600 bearings should be manufactured at a time. So what should be the economic batch run? 3,600 bearings. So first question, what would be the optimum run size for bearing manufacture? The answer for A is 3,600. 600. 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 600 B, assuming that the company has a policy of manufacturing 6,000 bearings per run, how much extra cost the company would be incurring as compared to the optimum run suggested in A? All right. So first, let's see what is the ordering cost or run cost, setup cost. If we are doing 3,600 bearings per run, 24,000 divided by 3,600 would be our run and multiplied by 324. That would be our ordering or setup cost. So when you are manufacturing 3,600 bearings per run and you have to manufacture 24,000 bearings, so 24,000 divided by 3,600, it suggests that you will be having 6.667 runs rounded off. Here, when we solve this question, we may assume that it is not possible to run in fraction. So we may take 7 run, but just for calculation, we may assume theoretically that let's say 6.67 run are possible. So 6.67 run into 324, the total ordering or setup cost will come out to be 2160. And what would be the carrying cost? So as you are manufacturing 3,600 bearings, on an average, you would be carrying 1,800, and the cost of carrying one bearing per annum is 1.2, or you can say 0.10 into 12. So this comes out to be 3,600 divided by 2, 1,800, 1,800 into 1.2. This is also rupees 2.2160. So your total cost becomes 4,320. Total ordering and storing cost becomes 4,320. However, in part B says if the company has a policy of doing 6,000 bearings per run. So if that is the scenario, your setup cost would be 6,000, 24,000 divided by 6,000. You will be doing 4 runs and 4 into 324. The total setup cost will come out to be 1,296 rupees. So we can see that as the number of bearings have increased per run, the setup cost have reduced from 2,160 to 1,296. And what is the storing cost or carrying cost of these bearings? So storing cost, on an average, you will be storing 6,000 by 2, that is 3,000 units, and 3,000 into 1.2, that will be 3,600. So your total cost of storing and carrying would plus ordering or run would be 4,896. So the question says, what would be the extra cost you would be incurring if you have a policy of manufacturing 6,000 bearing per run as compared to the optimum run suggested in A above? So the optimum run is for 3,600 bearings, and the ordering and carrying cost in 3,600 bearings would be 4,320. But if we start setting up a run for 6,000 bearings, then the ordering and storing cost would be 4,896. So setup cost and storing cost would then be 4,896, which is a little more than your setting up and carrying cost in optimum run. So you will be incurring 576 rupees extra. Okay. If you have any questions, you may please unmute and ask, or else you can type your queries in the chat with. So the extra cost incurred is 576 rupees. One interesting information or fact here is when you have an optimum run, you will see that ordering cost is exactly equal to the carrying cost. And this we can see from the graph also. The total cost is minimum where the two meet. So the storing cost and placing cost must be exactly equal when you have a economic order quantity or economic batch quantity, right? Third part, third question here is, what is the minimum inventory holding cost? So we have already calculated what is the minimum inventory holding cost. Minimum inventory holding cost in case of EBQ is 2160. So when he is asking what is the minimum inventory holding cost, that would be minimum if you don't hold any inventory, you do maximum number of runs and you just manufacture 1 or 2 units. But we cannot do that. So we have to find out that what should be the minimum inventory holding cost under the optimum run size. So the answer to part C is 2160 is the minimum inventory holding cost when we do the optimum run. So this is the economic order quantity, which tells us that what is the number of units we should order, and if we are manufacturing, what should be the economic batch quantity. Instead of ordering cost, here we take up the setup cost. So every time a machine is set up to run the production. Now, similar question can also come in this form. The purchase department of your organization has received an offer of quantity discounts on its order of material as under. So here in the first question we assumed, and it was the relevant costs were carrying cost and the storing cost and the ordering cost. But nothing is mentioned about the price of the product or the cost of raw material or anything. We assume that it will remain constant, it will remain same no matter whether you have ordered 3,600 units, whether you order 6,000 units, whether you order 12,000 units in one go, or you order 100 units. However, in real scenario, there can be trade discounts. So the vendor may offer you a lesser price if you offer or you order more quantity. So that means now the material cost will also become relevant. So if we order less than 500 units, the price per ton is 1400. If we order anything between 500 and 1000 is 1380. If we order anything from 1000 to less than 2000, we get another discount of 20 rupees. And from 2000 to 3000, we get 1340. So we get successive discounts, which are always a little less if we order more. So continuing with the question, the annual requirement is 5,000. Now here, if you get questions like this, you can take any quantity less than 500, let's say 400. Then you take the slabs, like how much is it costing at 500? How much it is costing if you order 1,000? How much is it costing if you order 2,000? And what is the cost if you order 3,000? However, in this question, it is specifically asked that you take the purchased quantity options 400, 500, 1,000, 2,000, and 3,000. That is what you generally do, but it is specifically given, so you will use these figures only. So the annual requirement is 5,000. The delivery cost is 1,200. So the ordering cost is 1,200. And the annual stock holding cost is estimated to be 20% of the average inventory cost. So this time it is not given like 10 paisa, 20 paisa, or 2 rupees, 1.2 rupees. It is straight away a function of your raw material price. And as the raw material of price is changing consecutively, constantly, the holding cost will also change accordingly. So in these type of questions, we generally draw a table and then we calculate the price or the cost where the material, order and placing cost, the total of all three is the least. So which among them will be the most economical order quantity, presenting the relevant information in the tabular form. So let's see how we draw the table for this. So our first column is what should be the quantity order. So quantity ordered has been specifically set at 400, 500, 1000, 2000 and 3000. So when you have this much quantity order, you will also be able to calculate number of orders. As we know how many units we require, 5000. And what is the quantity we are ordering? 400. So number of orders would be U upon Q. So 5000 divided by 400, 5000 divided by 500, 5000 divided by 1000, 5000 divided by 2000 and 3000, so on. So 5000 divided by 400 gives you 12.5 orders. This would be 10 orders. This would be 5 orders. This would be 2.5 orders. And this would be 1.67. You may assume fractions to be possible theoretically to be able to calculate the most economic quantity. Now we have to store these units also. Storing cost will come a little differently. How will you get the storing cost? How many quantity you ordered? Divide by 2. On an average, how much quantity you store? Multiplied by the raw material purchase price and 20% of that. So when you order 400 units, on an average you hold 200 units. 400 by 2, 200 units. And when you are ordering 400 units, the price is 1400. So you will be holding on an average 200 units. The average price of the raw material you hold will be 2,80,000 into 20%. So your holding cost will be 56,000. Here 500 divided by 2, but now the raw material will cost you 1380. We see that there is a successive 20 rupees less on whenever you change the level or the tranche. 1380 into 20%. So average inventory held is 250 units. The cost of average inventory held is 250 into 1380, 3,45,000, and 20% of that is 69,000. Here, 1000 by 2, 1000 divided by 2 into 1360 into 20%. One lakh 36,000. 2000 by 2 is 1000. 1000 into 1340 into 20%. 2,68,000. So we can see as our raw material store quantity is increasing, storing cost is constantly increasing. 3000 divided by 2, 1500 into 1320 into 20%. Three lakh 96,000. So this is your storing cost. Okay. Your placing cost or ordering cost would be number of orders multiplied by cost of storing 1 unit, cost of ordering. So ordering cost is 1200 per order. Cost per order is 1200. So the total placing cost will be number of orders into 1200. 12.5 into 1200 is 15,000. 10 into 1200 is 12,000. 5 into 1200 is 6,000. 2.5 into 1200 is 3,000. And 1.67 into 1200 is 2,000. Here, as there are successive discounts, we will also need to consider the material cost because it is changing with number of units ordered. No matter how many units you order, but annually you are going to place an order for 5,000. So this will remain 5,000 into the relevant price. So here the material will cost you 5,000 multiplied by 1,400, 5,000 multiplied by 1,380, 5,000 multiplied by 1,360, 5,000 multiplied by 1,340, and 5,000 multiplied by 1,320. For examination purposes, I just calculate one thing here, that every time the discount is of 20 rupees and 5,000 into 20 will be 100,000 or 1 lakhs. So if I calculate 5,000 into 1,400, this comes out to be 70 lakhs. Every time I'll reduce 1 lakh from here instead of doing all the calculations. 68 lakhs, 67 lakhs, and 66 lakhs. Now we'll calculate finally the total cost under various scenarios. So 1, storing cost, 2, placing cost, and 3, material cost. We'll see where the total of the 3 is the least. So this is 70 lakhs, 71,000. This is 69 and 12, 81 and 690, 69 lakh 81,000. Then 142, so 69 lakh 42,000. 2 lakh 68 plus 3, 271. 69 lakh 71,000. And 396 plus 2 is 398. 66 plus 398, 6998. Where do we see the least cost? The least cost is here. So how many units we should order? 1,000 units considering the discount. So here the reorder quantity is 1,000 units considering discount. Sometimes you may be asked a question, how much discount should the vendor offer so as to lure the customer to order 2,000 units? So he wants the purchaser to buy 2,000 lot of 2,000 units, not of 1,000. So in this case, we will see what is the difference between the two. So here it is costing 69 lakh 42,000. Here it is costing 69 lakh 71,000. So it is 29,000 rupees extra, right? The cost is 29,000 extra over ordering 1,000 units. So if the vendor offers a total discount of 29,000, now 29,000 spread over 5,000 units, so approximately 5.8 rupees further, rupee 5.8 per unit further. So if this was not 1340, for 2,000, total cost is 9,41,000. 5,000 into 1340 is your raw material cost, which is 67 lakhs. And when you will add 2,68,000 plus 3,000, 2,71,000 plus 67 lakhs. It is 69,71,000. The raw material price is far significant. It's in 10 lakhs. It's in millions, whereas these figures are in just 1 lakh, 2 lakh, 3 lakh, 4 lakh. So it will remain around 70 lakhs only. It cannot jump to 90 something. Okay. Uh, Miss, are you clear? Right? Santhina, is it clear? Yeah. So you may be asked a question, what should the vendor offer a discount so that the customer orders 2,000 units at a time? So we will have to compare the difference between the two. We are having a total cost of 29,000 extra. So if the vendor offers us a further discount of 29,000 in totality, spread over 5,000 units, rupee 5.8 per unit. So your answer would be, if the vendor offers a discount of at least 5.8 per unit, we may consider ordering 2,000 units at a time. Okay? You have to use the word at least, because if the vendor will offer a discount of 6 rupees, 7 rupees, you will definitely find this option more cheaper. So at least the discount that we need is rupees 5.8. All right, let us look at one more question from EOQ perspective. Shriram Enterprise manufactures a special product, which is Z, and the following particulars collected for the year. You have monthly demand for Z 1,000 units. Now, very important thing is he manufactures a product Z. But when we are calculating EOQ, we are looking at the raw material or the input material, how many input material we have to order. So this 1,000 units is the monthly demand. That means the monthly demand for annual demand for Z, the manufactured product, is 12,000 units. Cost of placing an order is clearly given. That is O, cost of placing an order. Annual carrying cost is also given, rupee 15 per unit. So ordering cost is also given clearly. Storing or carrying cost is also given. Normal usage is 50 units per week. So if the usage is 50 units per week and there are 52 weeks in a year, so our consumption is 2600 units. So this is what we are more interested in rather than the 12,000. This 12,000 is irrelevant for us because it is manufacturing Z and the demand for Z. But what Z requires is some raw material, which is used 50 units per week. So 52 weeks are there in a year, 50 into 52, you will order 2600 or use 2600 units to manufacture Z. Just one single change. Shriram Enterprise manufactures a product requiring Z, requiring raw material Z or requiring Z. Then your U would have become 12,000. Okay, so be careful. What is the raw material requirement? Raw material requirement appears to be 2600 units here. Minimum usage is given, maximum usage is given, reorder period is given. So if we look at the question, the first question is, what is the reorder quantity? So let us say economic order quantity would be the reorder quantity. And for that, using formula 2 into A into O on C, where A is the annual usage, O is the cost of placing one order, and C is cost of holding one unit for 1 year. So 2 into 2600 into O was 100 and carrying cost is 15. We'll solve for 2 into 2600 into 100 divide by 15 under the root. So you are going to order 186.189 or 280 units per order. Once again, you can always write it is not possible to order units in fractions, so you can reduce it to approximately 186 units. In the previous question also, the number of orders placed was 12.2.5, 1.67. So theoretically, you might have taken, but in real life, it is not possible. Now let us arrive at the next question related to material. First was, how many units to order? So we have answered that. How many units should be ordered at a time? We have answered that. The answer is EOQ, which may also be called as ROQ, reorder quantity. And the material price can also be considered there if discounts are offered. Now, our second question is when to order. When should we place the order? So the formula to find out when to place the order is, think about it from this perspective. You have a regular consumption of flour or rice in your house. You eat rice. So depending upon how many members are there in the family, depending upon how often you eat rice. So let's say you bring a pack of 10 kgs, right? So this is your EOQ. You have considered it that the economic order quantity for ordering rice is 10 kgs pack. And it's not that when the rice is completely finished in the house, when it is 0 kg you order. You always order when there is 2 kgs or 1 kg left, right? So that it does not finish. You are not going to sleep empty stomach. You have something, and by the time this 10 kgs will come to your place, you will consume from this 2 kgs or 1 kg. So you order not when the complete raw material or when the quantity is exactly 0. You or place an order in such a way that when the raw material is at a level, you place an order and start consuming from there until and unless the order reaches you, right? So that is the level when you have to place an order, which is called the reorder level. So how do we find out what should be the reorder level? Now, there is always a concept. One thing that you can take is you can be 100% conservative. That means you are not risk taking. So you assume that, let us say, it takes maximum time to reach us. So maximum consumption into maximum time. We follow this formula, but this is a very conservative formula. Maximum consumption into maximum time. Here, what we are assuming, here we are assuming that when you order 2 kgs, let's say it will take maximum time. Maximum time is 3 days. And in per day consumption, maximum you can consume per day is, let's say, 1 kg. So you will place an order when your material is 3 kgs left. So that even if it takes maximum time, and even if you consume maximum, you are not stock out, you are not short of raw material. So this is one approach, maximum consumption into maximum time. But there is another approach that if you have some safety stock or some level buffer or safety stock here, then you can assume that your average consumption will follow into average time, average lead time, basically. Time it takes to receive the material in your place, right? So either we go very conservative, maximum consumption into maximum time. So we order at such level when we are sure that there is no point chance of being stock out. Alternatively, if we have some safety stock, we have kept some safety stock, we can assume that we will be consuming in an average manner. And on an average, whatever time it takes, we will be receiving the material within that lead time. So this one is a better approach because if you don't go by take any risk, if you are totally conservative, you will end up piling up more levels of inventory, which will impact your profits. So reorder level has two formulas, maximum consumption into maximum time or safety stock plus average consumption into average time. So let us see what is the normal consumption, minimum consumption, and maximum consumption. So the question is very clearly saying maximum consumption can go up to 75 units per week. Average or normal is already given, 50 units per week. And minimum consumption is also given, which is 25 units per week. So this is the consumption pattern. And reorder period or lead time is given 4 to 6. So 6 weeks is the maximum time and 4 weeks is the minimum time. When average is not given, you can take the average of maximum plus minimum divided by 2. So 5 weeks is the average time. Now, if we want to be very conservative, 75 into 6, that becomes our reorder level. Maximum consumption into maximum time, 75 into 6. So you will order at 450 units. When there are 450 units, you will place an order for 186 units. Right? So you have the second question, third part, minimum level. How do you calculate the minimum level? Now, what will happen is, let's say this is your reorder level. At this point, you place an order. Now, we know that order will take at least 4 to 6 weeks, somewhere between 4 to 6 weeks. So what will happen is, until and unless that order arrives, here you place an order of ROQ or EOQ rather. Now you know that it will take some time to receive those units. So what will happen? Until those units are received, you'll start consuming from here, and the level will fall to a minimum level, right? So what should be the formula for minimum level? Reorder level minus whatever the consumption you make in this period till your unit arrive. So let's assume here it will take average consumption is consumed in this period, and it takes average time to receive the units. So this will be your minimum level. Reorder level minus average consumption into average time. What is the maximum level? Once again, at ROL, you have placed an order for EOQ. So let us say ROL was 450 and you placed an order for 186 units. So the maximum level will become 450 plus 186, approximately 636. What will happen now? Will the 186 units arrive just instantly, immediately you order? No, it will not arrive immediately. So it will take some time to arrive. So by the time you receive this 186 units, you are going to consume at least something. Something will be consumed by the time you receive this. So the maximum level will fall by that. So your formula for maximum level is when you were at reorder level, you added it on this, the reorder quantity. Okay, reorder level plus reorder quantity. So at 450, you ordered something, but this is not the maximum level because by the time the reorder quantity arrives, you are going to at least consume something, minimum consumption, even if the reorder quantity arrives very fast, even if it takes minimum time. Okay, so this becomes your formula for reorder level plus reorder quantity minus minimum consumption into minimum time. And what is the average level? One formula could be maximum level plus minimum level divide by 2. So you can take the average stock level as maximum plus minimum level divide by 2. Or you can also do one thing. You can add minimum level plus half of the reorder quantity. Both will give you different answers. They will not give you the same answers. You can use any of the two formulas. In reorder level also, maximum consumption into maximum time or safety stock plus average consumption into average time. The both will give you different answers. So let us find out the answer for this question here. Monthly demand was 26, usage is 2600, ordering cost is 100, carrying cost is 15. So first part, EOQ. 2 into 2600 into 100 divided by 15. So it says we are going to order 186 units. Second question, what is the reorder level? Let's stick to this formula, maximum consumption into maximum time, because we don't have average, the safety stock. So this is the most conservative. So maximum consumption was 75 units per week, and maximum time it could take is 6 weeks. So we have 450 units reorder level. Now we calculate the minimum level. So from reorder level, when you will consume on an average basis, you will get the minimum level. So from 450, you are consuming on an average 50 units, normal usage is given, and on an average it takes 5 weeks. So 450 minus 250, this is reorder level plus reorder quantity minus whatever the minimum you consume in this phase. Minimum consumption into minimum time. So reorder level is 450. 186 units is what you order, assuming the ROQ to be the EOQ. Minimum consumption we have seen is 25 units, and minimum it will take 4 weeks. So your maximum level will be 536 units. And fourth, average level, that would be minimum plus maximum, that is 200 plus 536 divided by 2, or alternatively minimum level, that is 200 plus half reorder quantity. Half reorder quantity is 1 by 2 of 186. So 293. Like I said, if you use two different formulas for average level, you will get two different answers. Both are correct. You cannot say which one is more accurate. Okay. Any questions or doubts here? Reorder quantity, reorder level, minimum level, maximum level, and average stock level. Sometimes you also have a concept of danger level. So when you have danger level, it talks about sometimes when you need something in emergency, you can get it anyways. You may incur some extra cost. So there is a emergency time, lead time also. Normally your supplies are coming through train, but in emergency you may also airlift them. So emergency time or emergency lead time may also be given. So let's say here we have from 4 to 6 weeks in the previous question. But if there is extreme emergency, you can also get it within 2 weeks. So if average consumption is 50, average consumption is 50 units per week. So if emergency lead time is 2 weeks, the danger level will become 2 weeks into 50. That is 100 units become the danger level. So if your level of inventory level and it reaches minimum is 200. So if it reaches 100 units, you can take that as the danger level, right? Let us take one more question. A company has an option to procure a particular material from two sources. One is source one, which tells you that there would not be more than 2% defective. Then there is another source two, which says that on the basis of past experience of supplies received from it, that the defective percentage is 2.8%. Material is supplied in lots of 1,000 units. So if you make procurement from source one, or you make procurement from source two, quantity ordered is same, 1,000 units, 1,000 units. Here, the percentage of defectives is 2%, but here the percentage of defectives is 2.8%. So number of defective pieces is 20, but here they are 28. So 8 units you will get extra defective pieces. Source 2 supplies the lot at a price which is lower by 100 as compared to source 1. So in a sense, we can say source 1 is charging 100 rupees extra for lesser defectives. So source 1 offers you more quality. Therefore, it is saying, I'll give you 2% defective only, but it's costing you 100 more. Whereas the source 2 is charging a little less, but it is giving you more defectives. So we will compare the defective units can be rectified for use at a cost of 5 rupee per unit. So you are required to find out which of the two sources is more economical. Now, here you are paying a kind of cost. Let's say this is X, this is X plus 100. And cost of rectifying the defective, 5 rupee per unit. So here it will be 20 into 5, that is 100. Here it will be 28 into 5, there would be 140. So what is the total extra cost you are incurring here? 200. And what is the cost you are incurring here? 140. Okay. Differential cost would be 60 more. So if you procure from source 1, it will cost you rupees 60 extra. So your procurement should come from source 2. Concept here is it is giving you 8 units more defective. Now 8 units more defective multiplied by 5, it will cost you 40. So there is no need to pay 100 rupees extra to save 40. Okay. What if the cost of rectifying was higher? So if the cost of rectifying was, let's say, 8 units extra. So 100 divided by 8, 12.5 rupees. Not 5 rupees, but 12.5 rupees. Then source 1 and source 2 would have been both equal. They would be equilibrium. So 8 units extra would cost 8 into 12.5, 100 rupees to rectify. Whereas you will have less 8 units, less defective here, for which you are paying 100. So if the cost of rectifying was 12.5 rupee per unit, source 2 and source 1 would have been given us same results. But if the cost of rectifying was more than 12.5, then we would have gone to source 1. So it's like incurring a fixed cost of 100 and comparing it with a variable cost of 5. So at 20 units more defective, source 2 would become less lucrative. Otherwise, source 2 is more cheaper. Okay. We'll do one question on how to calculate the safety stock. Like I said, that the reorder level can also use a formula of average consumption into average time instead of maximum consumption into maximum time. Average consumption into average time when we have safety stock. So what should be the optimum level of safety stock? We'll have to see. How you calculate that? This information is given in respect of a particular item of inventory. Let's say 2 ton, 3 ton, 4 tons of usage is there with certain probability, 0.2, 0.6, 0.2. And lead time is 25 days, 35 days, and 45 days with a probability of 0.2, 0.5, and zero point 0.3. Okay. So we have to calculate what is the optimum level of safety stock. What is the probability of stock out given that carrying cost is 2,000 per year and stack out cost is 8,000 per ton. Okay. So this information is given. Your consumption can be 2, 3, 4 and lead time can be 25, 35, and with a probability of 0.2, 0.2, 0.6, 0.2, 0.2, 0.2, 0.5, 0.3. So we need to create a scenario here. How we calculate the scenario here? Your usage can be 2, 3, 4, right? 2, 3, and 4 tons. Now with 2 tons, the probability is 0.2, 0.6, and 0.2, right? And lead time can be 25, 35, and 45 days. So these are the possible scenarios that we have, that it can usage can be 2 and it can take 25 days. This probability is 0.2, 0.5, 0.3, and we'll repeat this 0.2, 0.5, 0.3, 0.2, 0.5, and 0.3. So 2 daily usage 2 and lead time 25. So 2 into 25, consumption will be 50. 2 into 35, 70. 2 into 45, 90. 3 into 25, 75. 3 into 35, 105. 3 into 45, 135. 4 into 25, 100, 140. And 4 into 45, 180. So this is the consumption with the joint probability. They'll multiply zero point 0.2 and zero point 0.2, 0.04, 0.10, zero point 0.2 into zero point 0.5, 0.2 into 0.3, 0.6 multiplied by 0.2, 0.6 multiplied by 0.5, 0.6 multiplied by 0.3, 0.2 multiplied by 0.2, 0.2 multiplied by 0.5, and 0.2 multiplied by 0.3. If you will take the total of this will come out to be 1 point. Now your consumption, if you see, if you arrange it in ascending or descending order, you can see the maximum consumption is 180. Then you have second, third 135, fourth 105. On fifth you have 100, six, 7, 8, and 9. So this is how I've arranged the 9 possibilities from maximum to minimum. Now, if I'll go by the formula, average consumption into average time. So average consumption into average time will be calculated. How? By using the formula of summation XIPI, which you learned in statistics in quantitative. So 2 into 0.2, expected value of consumption would be 3 into 0.6 plus 4 into 0.2. Comes out to be 3 tons. And lead time 25 into 0.2 plus 35 into 0.5 plus 45 into 0.3. The expected value of lead time is 5 plus 17.5 plus 13.5. So 36 days, right? So we have calculated what is the average consumption, return, and average lead time, 36 days. So if I use the formula for reorder level as average consumption into average time, it comes out to be 36 into the 3 into 36, 108 units. So that is for sure. The reorder level has to be at least 108. To this, we will add some safety stock. Now, what should be the safety stock? If you look at 108 units and you consume 50, there is no problem. You don't need any safety stock. If you order at 108 units and keep a zero safety stock, here also there is no problem because consumption is less than 108. 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 And consumption is less than 108 when you are consuming 100 units. Problem is in these three scenarios, 135, 140, and 180. So let's say we keep a safety stock of zero. So stock out scenarios will happen when the consumption is 135, 140, and 180. Three scenarios when your consumption will be more than 108. Now, stock out scenarios are this, but what is the stock out units? So in this scenario, the stock out units will be 108 is your reorder level with a zero safety stock. So 135 minus 108, 27 units, 32 units, and 72 units is what you are going to be stock out with, right? So what is the probability of these three scenarios? 135 is 0.18. Can you explain illustration 7 of safety stock from study material on page 2.32? I'll just have a look at that. If I give you a break, then I'll just see. Definitely. But I think you will be able to understand this from here. Do let me know if you are not able to understand this. Okay? And give it a try. I think you should be able to do it yourself if once you understand this concept. Right? Average consumption into average time has been calculated at 108 units. And beyond 108 units, there are three scenarios when you're stock out. When there is 135, 140, and 180 units. So if you are ordering at 108 and the consumption is 135, so you are stock out by 135 minus 108. Here you are stock out by 140 minus 108. Here you are stock out by 180 minus 108. And these scenarios have a probability of 0.18, 10, and 0.06. Right? So expected stock out units will be multiplied by the 3. 27 into 0.8, 4.86, 32 into 0.10, 3.2, 72 into 0.06, 4.32. So total stock expected stock out units will become 4.86 plus 4.36, 4.32, sorry. 4.86 plus 3.2 plus 4.32. So your expected stock out units will be total of 12.38. So 12.38 and stock out cost is how much? 8,000 per ton multiplied by 8,000. So 12.38 multiplied by 8,000. Your total stock out cost will be 99040. Whereas what will be your storing cost? As your safety stock is zero, your storing cost would be zero, and your total cost would be 99040 if you have a safety stock of zero. So let us prepare ourselves for this scenario and let's keep a safety stock of 27. So if we have a safety stock of 27, our reorder level becomes 135. Okay. That means we have only two scenarios when we'll be stock out with 140 and 180 units. Here we will be stock out by only 5 units because 140 minus 135. And here we will stock out by 45 units. This has a probability of 0.10 and this has a probability of 0.06. 5 into 0.10, 0.5, and 45 into 0.06, 2.7. So the total stock out units would be 3.2, and 3.2 multiplied by 8,000, your stock out cost would reduce to 25,600 only. But here you will have storing cost. How many units you are storing? 27. And what is the storing cost? 2,000 per ton. So 27 into 2,000, you are going to store 54,000 is will be your carrying cost. Be careful. Here we do not divide by 2 because safety stock is kept throughout the period. You don't consume from safety stock, so it does not fall from 27 to 0. It will not be averaged. 54,000 plus 25,600. So your total costs are now reduced to 79,600. So it's better to keep a safety stock of 27 units rather than keep a safety stock of 0 units. Now let's prepare ourselves for this scenario also. So let's keep a safety stock of 32 units. So if you have a safety stock of 32 plus average consumption into average time is 108, that means your reorder level is 140, which means your stock out situation is only one when there is 180 units consumed, and you will be stock out by 40 units, which has a probability of 0.06, and the stock out units would be 2.4, and 2.4 into 8,000. Your stock out cost would be 19,200. But you are going to carry 32 units. So 32 into 2,000, 64,000 would be your storage cost. 64 plus 19,200, 83,200. Let us prepare ourselves for this scenario also. Let's keep another 40 units. So let's keep a safety stock of 72. There is no situation in which you will be stock out because 72 plus 108 is 180. And there is no scenario when your consumption is 180. So there is no stock out scenario. All this will be zero, but your carrying cost would be 72 into 2,000, 144,000. So total of carrying plus storing will be 144. Now, which one is the least of the four? So we should keep a safety stock of 27 units, and we should prepare ourselves for, we are okay if there are two scenarios when we are stock out with 140 and 180 consumption. Okay. Uh, there was a message in the chat from Prem Kumar. Prem, I am sure when you will now try the question from study material, you will be able to solve it. Do let me know. Have you got a good understanding of this or not? Yes, Prem, unmute and speak. Have you understood this? All right. So give it a try. I'm sure you will be able to do the question from the study material. Based on this, we will have one more question, which which you will be able to understand the concept from here. IPL Limited uses small casting, one of its finished goods. 54,000 castings are used per annum. So U is given as 54,000, costing 800 per casting. That is the price of the raw material. The castings are used evenly throughout the year in the production process on a 360-day per year basis. So, students, if this is not given in the question, you can write this as an assumption when you are using EOQ, that we are assuming that the consumption is evenly spread throughout the year. So how many days are there in a year? 360. That means your per day consumption can be calculated. 54,000 divided by 360. Your per day consumption will be 150 units. Company estimate that it will cost 9,000 to place an order and 300 to carry. Carrying cost is 300, 1 unit for 1 year. High carrying cost result from the need to keep the casting in carefully controlled temperature and humidity conditions and from the high cost of insurance. So we have found out four information. Usage is 54,000, ordering cost is 9,000, and carrying cost is 3,300 with 150 units consumed per day. Delivery from the foundry takes 6 days, but it can take as much as 10 days. So the possibility of delivery can be 6, 7, 8, 9 days. And basically 76, 7, 8, 9, and 10 days. With a percentage of occurrence 75% times, 10% times, 5%, 5%, 5%. The total of this is 100. That's why I can call it 75%. Had this been 200, I would have to call it 37.5%. So this is the frequency of occurrence and the total is 200. Therefore, 75 times or 75%, one in the same. So delivery from the foundry generally takes 6 days. So average time is 6 days. And average consumption per day, we have found in the previous slide, it's 150 units per day. So average consumption into average time would be 6 into 150, 900 units. Okay. So this is given, it can happen, it can take 6 days, 7 days, 8 days, 9 days, 10 days. So related to the previous question, if we keep a zero safety stock, so we are prepared for this 75% times, we will be able to meet the requirement. But if it takes 7 days, we will be falling short of 1 day. So we are taking 10% risk. If it takes 8 days, we are falling short for 2 days, right? So we are taking 15% risk. If it takes 9 days, we are taking 20% risk. And if it takes 10 days, we are taking 25% risk. So if you don't keep any safety stock, all these fall in the risk zones. 10 plus 5 plus 5 plus 5, 25% risk you are assuming. If you keep a safety stock of just 150 units, that means you don't order at 900 units, you order at 1050. That means you are prepared for 7th day, which means you are taking 15% risk. If we are prepared for the 8th day, let's say we keep a safety stock of 300 units. 6 days average consumption 900, but let's say we keep a safety stock of 2 days, 300 units. So we are covering for the 7th and 8th day also, and we are taking a risk of 5 and 5, 10%. Okay. So this is how you are going to calculate. So first part is compute the EOQ. That is simple, I guess. 2 into 54,000 into 900, was it 900? 9,000, sorry, divide by 300. So 1,800 units. Now, if you're willing to take a risk of 15%, that means not preparing for this day, and this day. 5 plus 5 plus 5, 15% risk. What would be the safety stock? So, like I said, if you're taking a 15% risk, which means you are preparing for up to seventh day. So you need to keep a safety stock of 1 day, which means you keep a safety stock of 150 units, and reorder point would be safety stock plus average consumption into average time, 1,050. Assuming the company is willing to take a 5% risk, only 5%. So you are preparing for 9 days. You have to keep a safety stock for 3 days. So 3 into 150, you will keep a safety stock of 450 units, and reorder point would be 450 plus 900. Okay. Similarly, 5% stock out risk, what would be the total ordering and carrying cost? All right. So we are ordering 1,800 units, and we are keeping a safety stock of 450 units. 54,000. 1,800 is the ordered units, on an average 1,800 by 2, plus 450 would be the safety stock. So these are the units you are carrying. 900 plus 450 is 1,350, and 1,350 into 300, 4,05,000 is the carrying cost. Plus ordering cost. How many number of orders? 54,000 divided by 1,800. These are the number of orders multiplied by 9,000. 30 orders, 30 into 9,000, 2,70,000. So 4,05,000 plus carrying cost, which is equal to 270. Your total cost would come out to be 6,75,000. Okay. Refer to the original data. And what if the company does a re-engineering process and cost of placing order comes out to be 600? So you can definitely calculate how it will impact the question if there is a change of the ordering cost from 9,000 to 600. So obviously it becomes cheaper, you will order less number of quantities. Similarly, what would be the estimate when the waste and efficiencies caused by inventories are considered? True cost of carrying the unit is 720. So instead of 300, if you increase it to 720, you can calculate what is the new EOQ. Like 2 into 54,000 into 600 divided by 720. So your number of units will reduce, ordered units reduce significantly because placing cost has become far less and storage cost has become far higher. Okay. So I hope you've understood completely how we calculate the EOQ, reorder level, etc. The second type of questions in material is related to pricing of receipts. So what you have to do here is take care that these are the details available in respect of cost consignment of 1250 kgs of material Z. So how do we calculate the cost? First, we take the raw material price, and if there are any trade discounts, that should be reduced. So minus 10%, so minus 2. Ultimately, it will cost you 1250 into 18. So this is the net invoice price. 20 minus 10%, net invoice price is 18. Now excise duty is on 18 and sales tax is also 8% of net invoice price, including excise duty. So first we will add the excise duty to this. So the total cost will become 1250 into 22.5. And then on 22.5, we have to apply 8%. So it's a excise sales tax would be 1250 into 1.8. There is also insurance. So 1% of net invoice price, 0.18. 18 is the net invoice price. Okay. So we have to calculate the price of receipts by taking the raw material cost, adding to that the excise duty, particularly if there is no input tax credit or no refund of duties. So when there is no ITC, no refunds, then you have to add the excise duty into that. If there is a refund, then you do ignore the excise duty as part of material cost. Sales tax, you will definitely add. Trade discount should be reduced. Insurance has to be added to the cost. Delivery charges are also direct costs. They will also be added. Then cost of containers will be also added. However, if you get a refund when you return the container, you should reduce that portion. So it's like saying cost of container is 60 per container for 50 kg material. Rebate is allowed at the rate of 40 per container if returned within 6 weeks. So which is a normal usage feature. So we will take 20 per container, 60 minus 40. One container load was rejected on inspection, not accepted. So ultimately, you have not accepted 1250, you have accepted only 1200 kgs. Cost of unloading and handling is 0.25. This is also a direct cost, which you will add at the rate of 2.25 per kg, but it is only on the material which is ultimately accepted. So this will be 1200 into 0.25. So on the basis of this, you're required to find out the landed cost of raw material C. So some costs like delivery charges, they are incurred on 1250. Cost of containers are incurred. Insurance is incurred on total 1250. But ultimately, 1200 units will be bearing this cost. So you'll divide by 1200. Okay. And one more type of questions that are there in material is uh, pricing of issues. So you can follow a perpetual system of inventory, or you can follow a periodic. In perpetual, you price the issue simultaneously. But in periodic, you write the price of issue after a period. So you are given receipt issues, and there are various methods. One is FIFO, first in, first out. There is LIFO, last in, first out. There is average method, where you have simple average and weighted average. So there are different methods which you can follow: LIFO, FIFO. There is a specific cost method. There is standard cost method, right? So how do you price the issues? Let's follow a perpetual system. You have receipts. Let's say on January you receive, there's no opening balance. On January 1, you receive 300 at the rate of uh, 8.5. Okay. And on 2nd January, you issue the raw material. How many kgs? 100 kg. Now, whether you are following FIFO, LIFO, average, from 1st January to 2nd January, there is only one kind of raw material you have, one receipts, and January 2 will be from this only. So whether you're following LIFO, FIFO, average, the price will be at 8.5 only. On 10th January, you receive another 400 kgs, and that is at the rate of 8. And on 11th January, you issue 500 kgs. So here, if you're following FIFO, first, this 300 will be finished. Out of these 300, 100 is already gone, 200 from here, and remaining 300 from the 10th January lot. However, if you are following LIFO, entire 500 units, 400 will come from 10th January, and remaining 100 will come from 1st January lot. If you are following average method, which is a simple average, you will just take the average of the two prices, 8.5 plus 8 divided by 2. So we will price the issue at 8.25. If you are taking weighted average, we'll have to calculate 200 into 8.5, because out of 300, 100 is gone. So 200 from here is remaining, 200 into 8.5 plus 400 into 8, and then we'll get the average price, and the 500 units will be priced accordingly. So let us just take these two dates and calculate how you are going to record under different methods. Date 1st January, 300 units at the rate of 8.5. So total amount you will calculate. And out of that, 100 units are issued. And for this, the date is 2nd January. So what is the possibility of the rate? Okay, let me just write the balance here. So 300 units at the rate of 8.5, 2550. 2nd January, 100 units are issued. Now, whether you are following FIFO, LIFO, whatever, what is there in your balance? Only one lot. So this will go at from here only. What remains is 200 units at 8.5. Now, again on 10th January, you receive another 400 kgs. This is at the rate of 8. So your balance is now 2. One is 200 into 8.5, and another lot is of 400 into 8. Okay. Now from here, I'll issue 500 units. Okay. First method, FIFO. What will happen? Where will this 500 come? This 200 will come first, and balance 300 will come from here. So what will remain is only 100 units of 8. And the pricing of issue would be 200 at the rate of 8.5 and 300 at the rate of 8. If I had been following LIFO, 400 units would have come at the rate of 8. First, this would have been issued, and 100 would have gone from 8.5. So under LIFO, opening balance of 100 would have remained at 8. Simple average, 500 at the rate of 8.25, 4125 would be gone, and balance you can say 100 units are remaining. From 4900, you will subtract 4125, and the price of the balance unit would be 775. Under weighted average, we will divide 4900 by 600 and we'll get the rate. So it comes out to be 8.16. So 500 units at the rate of 8.16 would be issued, and 100 units at the rate of 8.16 will remain. So under different methods, you will see that different prices are chart for the issues, and the value of closing stock that remains in the balance is also different. So in the interest of time, I'm skipping it out in detail here. Otherwise, I thought I would explain to you all this. So let me just give you a 5 minutes break here, and then we'll start with the employee cost and labor, right? I hope you have understood the concepts in material and you have been quickly able to recap everything. If there anything specific you want me to explain to you, I can do that. Theoretical questions I have faced, some of the important ones I've pasted in the assignment and uploaded them. Any specific requirement? Prem, I would want you to try out that question, illustration 2.32, and just see if you can manage that now. And do let me know if you are having any issues in the chat. Just have a look at it and do you feel confident you can manage it now? All right, so let's start with the employee cost. Just as material is a very, very important component of cost, sometimes some industries are more labor intensive. There, the employee also plays a very important role. Now, when you are looking at an employee cost, you also have to look at the factor that there is some behavioral aspect also involved because you are dealing with an element of cost, which is a human being. So one has to be very careful while trying to curb this cost or reduce this cost. So therefore, when you talk about employee cost, there are certain departments which take care that the employee cost should not be very high and it should be controlled. The various departments is with the very first department would be the personal department, which will look at recruiting the right employee, giving it training and placing it in the right position. The personnel department is concerned with that there should not be much labor turnover. Labor turnover means that the labor should not leave again and again. So if that happens, there would be a lot of loss because of productivity, because of training, and because maybe there was no workforce to do the job. So a lot of cost is involved if there is a high labor turnover, which we do not want. Similarly, then there is the time and motion studies and timekeeping department, which ensures that when what is the time that the worker is spending in the organization, and when he is within the factory or working, what is on what job is he doing. So timekeeping is recording that when what time does he come and leave from the job, and time booking is what he's doing exactly when he is within the premises. Then there is the engineering department, which also do time and motion studies in the sense that it finds out what should be the best way to do a job so that it is most effective and efficient. There is the payroll department, which takes information from the timekeeping and booking department, as well from the HR department, and then makes a exact calculation of what payment should be made to what workers. There is a concern for overtime payments. Overtimes are generally paid at a higher rate. So you have to deal with how overtime uh, payments have to be adjusted in costing. Sometimes these overtimes are normal, sometimes these are abnormal. If they generally the basic rule in costing is any abnormal cost should go to the costing P&L account, whereas all other costs which are normal should be absorbed by the good units. Sometimes the overtime is on the request of the customer. He wants the job done immediately. So then you can charge it directly to the customer or to the job. Otherwise, you can treat it as an overhead if it is normal. Similarly, there is also a problem of idle time when you are dealing with the customer employees. Obviously, if an employee is reaching the factory at 9 a.m. in the morning, that is this time, it will take a while for him to travel to his job, to walk up to his job. He will take short breaks, he will take lunch breaks, etc. So all these are idle time. Then again, how do you deal with these idle time? This is also all about employee cost. Further, how the employees should be remunerated, what are the plans? Should they be given time rate? Should they be given piece rate? That is another concern. How we will see that whether they should be paid at time rate, which one is a better one? Then we have come across some incentive plans given by some management accountants, which says that this is one of the good strategies to reward the workers. So let us look at these questions now. Once again, we'll try to understand the various concepts using the questions here. We have a rate of change of labor force in a company during the year ending 31st March 2013, which was calculated at 13%, 8%, and 5% under flux, replacement, and separation method. And the number of workers separated during the year is 40. You are required to calculate average number of workers on roll, how many workers were replaced during the year, how many were new accessions or new recruitments, and number of workers at the beginning of the year. So basically, this is about labor turnover. So you calculate a labor turnover of for a period. So if you're calculating it for 1 month annually, you can multiply by 12 to get the figures. If you're calculating it for 6 months, you can multiply by 2. If it is a quarterly calculation, then you can multiply by 4 to find out what would be the annual figures for the labor turnover. Labor turnover means that the labor is leaving the organization and you are required to replace them with the new workers. Now, there are three methods in which this labor turnover is calculated. One is called separation method, which talks about how many workers left during the period, whether they were discharged, whether they resigned, whatever the reason, and divide by average number of workers in the period. Under the replacement method, let's say if 80 workers left the organization, and let's see we have figured out that there was overcrowding. We did not need 80 workers to do the job, or now we have replaced the 80 unskilled worker, and instead of them, we have got 20 skilled workers. So number of workers who have been replaced because of those workers left. Workers into 100. And third is flux method, which may also take number of separation plus number of replacement. Plus, it may also consider new accessions. So sometimes there is expansion in the organization and new workers are joining because of expansion. So they will not be considered as a replacement. So separation plus replacement plus new workers due to expansion or other things, divide by average number of workers. If you will not consider the new workers due to some expansion, etc., then flux will always be equal to separation plus replacement. Okay. So here in this question, if you see, it is saying that three calculations are made. Flux is saying 13%, replacement is saying 8%, and separation, as per separation, the turnover rate is 5% for the period. It's for the entire year. Okay. And there is also the number of workers separated is 40. So all these are relative terms in percentage, and absolute figure we have corresponding to the separated number of workers, which is 40. So you can take if the 5% of the average workers is 40, then what is the total number of average workers? Okay, so even if you put it in this formula, 5% is equivalent to 40 workers left divided by average number of workers multiplied by 100. So 5% will be, 40 will be 5% of what? Or average number of workers will be equal to 40 divided by 5%, 800. So we have 800 workers on roll on an average. So how many replaced? 8% replaced. So 8% of 800 would be 664 workers. New accessions or new recruitments. Now, if you look at flux, 8 plus 5 is 13 and flux is also 13. So new recruitment because of expansion, etc. does not appear here. So that is 0. And then it's asking how many were the workers in the beginning of the year. Okay. So how many workers were there in the beginning of the year? Now, if the average is 800, opening plus closing will become 1600, right? So there, the fourth part is average number. First is average workers. That is 800. 2 separated was 40. And 3 replaced were 64. And as flux is also saying 13%, which is 13% of 800, which is equal to 104. So new accessions, replacement are new accessions, but new joinees because of expansion, etc. is 0. Opening number of workers. So you can calculate an equation let's say opening was X plus 64 were new joinees, 40 replaced. So this becomes your closing figure. So closing is X plus 24 and X plus 24 divided by 2 is 800. 2x plus 24 is equal to 1600. 2x is equal to 1576 and x will be equal to 786, I guess. 88. So opening number of workers were 788. A similar question because of labor turnover can be: the management of Sunshine wants to have an idea of the profit loss or foregone as a result of labor turnover. Last year's sales, 66 lakh. PV ratio must have done the marginal costing. So PV ratio or contribution percentage is 20%. That means sales minus variable cost is 20%. So whenever there is a change in sales, 20% of this will directly impact your profit or loss. Total number of actual workers who worked by the direct labor force was 3.45 lakh. Total hours worked was 3.45 lakh hours. So you have generated a sale of 66 lakh while working in 3.45 lakh with a contribution percentage or PV ratio of 20%. As a result of the delays by the personnel department in filling vacancies due to labor turnover, we lost 75,000 potentially productive hours. So just imagine if you could generate a sale of 66 lakh in 3.45 lakh hours, sales lost for non-productive hours, for hours lost in filling vacancies, 75,000. Plus actual direct labor hours, which is 3.45 lakhs, include a 30,000 hours, which is training. So in this 3.45 lakhs, 30,000 hours was training as well. So 3.15 lakh hours was only actual work by trained workers, out of which 50% of the hours were unproductive. So out of this, only 50% output was achieved, which makes it 15,000 hours productive. So 3.15 hours actual production by trained workers plus 15,000 of actual production productive hours by trainee workers. So 3,30,000 hours is the total productive hours, which makes a complete sense. So this will be your working note one, where you will calculate the productive hours. Which will be 3,15,000 plus 50% of trainee hours. So 3,30,000. So we will find out sales achieved per hour. 66 lakh divided by 3,30,000 hours. So every hour, productive hour would generate a sale of 20 rupees per hour. 66 lakh divided by 3,30,000. And the PV ratio being 20% means a profit of 0.20 into 20%. A profit of 4 rupee per hour is lost if productive hours are lost. So lost hours are 75,000 because vacancies were not fulfilled and 15,000 hours because training was unproductive. So 75 plus 15, 90,000 productive hours are lost. Okay. So what would be the law? Finally, further costs were incurred because of labor turnover, like settlement cost, recruitment cost, selection cost, training cost. So, assuming that the potential production loss due to labor turnover could have been sold at prevailing prices, ascertain the profit foregone or lost last year on account of labor turnover. So, you have to read this line very carefully. As a result of the delays by the production department in filling vacancies due to labor turnover, 75,000 potentially productive hours were lost. Now, this non-productive hours of the training can become a part of this. You may assume it to be a part of the 75,000 potentially productive hours, or you may assume it separate. So 90,000 hours were lost. Therefore, profit foregone would become 90,000 into 4, 3,60,000 rupees. Besides, there would be other costs which you will add, like add all the four: settlement, recruitment, selection, training. So whatever, when you add all these four costs, the final answer is your total profit foregone because of labor turnover. Okay. Any doubt in labor turnover now? Two type of questions can be generally there. One is how much is the profit foregone because of labor turnover? So effectively, what you have to do is to find out potential productive hours lost and the rate of sale per hour. So you will say that that much sales was lost, and because of that, multiply by PV ratio, that much profit was foregone. And add to it other extra expenses which you have incurred because of labor turnover. So the total loss of profit would become this figure, right? Let us now do another type of question where we are trying to find out what is the effective cost per hour for the workers and how we allocate it across different jobs if the workers are doing different jobs. So the question is calculate the earnings of workers A and B from the following for a month and allocate the earnings of each to job X, Y, and Z. Basic wages are given for worker A, for worker B. So basic wages are 10,000 and 16,000. Dearness allowance is given 50%, 5,000, 8,000. Provident fund is also given on basic wages 8%. And employee state insurance ESI is also there on basic wages, which is 2%. So PF 8% and ESI 2%. Combined, it becomes 10%. Okay. 8 plus 2. So I'll take a combined 10% of basic. That is 1,000. And here also 1,600. So here the worker A has worked for overtime also for 10 hours. The normal working hours for the month are 200 hours. Overtime is paid at the double the normal rate plus DA. So the overtime rate is double the normal basic plus DA. So we will not include PF and ESI. Normal rate is basic and DA is 15,000 for worker A, and basic and DA is 16 and 8, 24,000 for worker B. We may not even calculate for worker B because we don't see worker B doing anything out here as an overtime. So let's calculate for worker A only. The normal working hours are 200. So when you will divide the normal working hours by 200, a normal rate would be arrived. And as overtime is double, so it would be 150 per hour. Okay, overtime rate per hour. So this worker A is getting basic, TA, PF, ESI, plus he's also getting 150 rupee per hour for 10 hours. That means 1500 as overtime bonus or total overtime. So these are the wages of the worker A and these are the wages of the worker B. The workers were also employed on jobs XYZ and the following proportion with overtime on job Y only. So overtime was on job Y only. And apart from that, worker A has allocated his time to job X, job Y, and job Z 4-3-3 or 40%, 30%, and 30%. Whereas worker B has given his time to job XYZ in the ratio of 50%, 20%, and 30%. So what you are doing is number one, calculate the earnings of worker A and B for the following month. So this is done, earnings of worker A and worker B. However, PF and ESI are deducted. They are not paid to the workers. So the worker A will get only 10, 5,000 and 1,500. So the earnings of worker A will become 10,000 plus 5,000 plus 1,500. That's 16,500. And the earnings for worker B will be 16,000 and 8,000, 24,000. Right? So these are the earnings of worker A and B. Out of this 16,500, 1,500 is allocated to A only and on job Y only. So this part is done. And also allocate the earnings to job X, Y, and Z. So we also will have to allocate these earnings to job X, job Y, and job Z. There is one important thing. If the question does not mention, overtime is generally paid at double the normal rate as per the Factories Act. Besides, if a worker is doing anything above 9 hours in a day or anything above 48 hours in a week, he is to be paid overtime for that extra hours. ESI, PF, these are all the payments which are statutorily deducted from the employee's salary, where the employer and the employee both may contribute. So workers were on job XYZ in the following proportion with overtime on job Y only. So you have to calculate the earnings of the worker A and B and for the month and allocate them to X, Y, and Z. So first part, earnings of worker A and B. I hope that is clear. We will write the basic DA, ESI, and PF, but since they will be deducted, so he will end up getting 16,500 together with overtime, and worker B will end up getting 24,000. Second part is to allocate this earnings of A, 15,000, earnings of A, 1,500 overtime, and earnings of B, 24,000 to job X, Y, and Z. So what you will do is you'll spread 15,000 in the ratio of 433. Here you can write worker, job, and this is rupees. 1,500 overtime is allocated only to job Y, and 24,000 will be spread in the ratio of 50, 20, and 30. So not just we have calculated what is the cost of earnings of both the workers, we have also allocated those earnings or that cost to the jobs X, Y, and Z. Any doubts here? So this is how you calculate the effective hourly rate or the calculation of earnings of the worker by considering DA, provident funds, ESI, overtime, as well as how you allocate these costs to the jobs. Next, let's talk about payment system. So the workers are paid at time rate, which means that if they work for 10 hours, they'll be paid for 10 hours. And there can be another system which is piece rate. So they'll be paid at the, let's say, 1 rupee per piece. So if they are manufacturing or they're able to produce 100 pieces in a day, they'll end up getting 100 rupees. Time rate means the worker is safe. He's getting the fixed payment for whatever the RCS input, whereas productivity could be lost here. The worker may not be working, yet he may be getting the same payment. This also frustrates the efficient worker. How do you measure efficiency? You can measure efficiency of a worker or productivity of a worker in two ways. Number one, uh, let's say one unit requires 1 hour for production. So a worker has worked for 10 hours and he has made 8 units. So as per standard, the output should have been 1 unit per hour. So in 10 hours, he should have made 10 units, right? So one of the ways of measuring efficiency is using output, actual output divided by standard output. So if 8 units are manufactured and 10 units should have been manufactured, the efficiency is 80%. On the other hand, you can also say that 8 units should have been manufactured in 8 hours. Okay. So if you want to measure efficiency using hours, it becomes reverse, standard hours by actual hours. So a job which was supposed to be done in 8 hours has been done in 10 hours. Efficiency is 80%. Efficiency is directly related to output. The more the output, more efficient. Therefore, actual output is numerator. Whereas it is inversely related to the time taken. So the less time you take, the more efficient you are. Therefore, here it is in the denominator. So none of the methods is perfect. Therefore, various management accountants have come up with various incentive plans which reward the worker for efficiency as well as ensure a minimum guaranteed per hour rate for their time they have spent. So majorly, we have two plans here. One is the Halsey plan, and the second is Rowan plan. So both of them give some bonus if the worker turns out to save some time or is efficient. So they both promise the time rate, actual hours spent multiplied by the hourly rate. They both guarantee this the worker will get actual hours into hourly rate. But they both give a bonus also. Now, the bonus given by Halsey is 50% of time saved into actual hourly rate. Whereas Rowan says that the I'll not fix it at 50%. I'll give you in the same proportion in which you are saving the time as compared to the standard time. So time saved upon standard hours. So whatever you have earned, you get a certain proportion of bonus on that. So whatever his actual earnings were as per time rate, a certain bonus will be applied, a percentage of bonus on that, which will be in proportion to the time saved by standard hours. So let's look at this question. Calculate the earnings of a worker under the Halsey plan and the Rowan plan from the following particulars. The hourly wage rate of wages guaranteed to the worker is 50 paisa per hour, and the standard time for producing 1 dozen articles is 3 hours. Actual time taken by the worker to produce 20 dozen articles is 48 hours. So here we have actual hours. AH is the actual hours, 48 hours. Standard hours will be calculated by calculating how much time does it take to produce 1 dozen article? 3. So for 20 dozen article, it will take 20 into 3, 60 hours. Time saved, 60 minus 48, 12 hours. So as per Rowan and as per Halsey, the wages of the worker will be, both will get, how many hours did he work actually? 48 hours. So they will get 48 hours into 50 paisa per hour rate. Hourly rate is 50 paisa per hour. That means they both promise 24 rupees plus a bonus. So what is the bonus here? Time saved is 12, standard time is 60. So just 20% of the actual wages. So 48 into 0.5 is 24 plus 20% of 24, 4.8, 28.8. Halsey gives half or 50% of time saved into hourly rate. So 24 plus 3, 27. So the wages under Rowan plan is more than wages under the Halsey plan. You will observe that if time saved is exactly half the standard time, then Halsey and Rowan gives exactly the same bonus. But when time saved is less than 50% of the standard time, Rowan gives higher wages, Halsey gives less. Above 50%, the bonus under Rowan is less, the bonus under Halsey is more. Reason being, Rowan applies the bonus on actual wages. Halsey is always giving the bonus on time saved. So as and when time saved increases, the bonus under Halsey increases. But as and when the time saved increases under Rowan, this proportion may increase, but the proportion applied is to actual wages, which will get reduced. So Rowan doesn't want that beyond the time the workers start working and damaging machines and material, etc., in order to generate a very high bonus. I hope it is clear. So the formula for Halsey plan is actual time into hourly rate plus half the time saved into hourly rate. Whereas under row 1, actual hours into hourly rate plus time saved divided by standard time multiplied by actual hours into hourly rate. So they both give the time rate, whereas row 1 gives a bonus proportionate to the time saved in proportion to standard time on the actual wages, whereas row 1 will, I'll say, always gives 50% of the wages that he would have earned if the time had not been saved. We have some important questions here. Let's say two workers, A and B, producing with the same material. Normal wage rate is also same. So under row 1 plan scheme, he is getting bonus according to health scheme. So A is getting bonus as per row 1 scheme and B is getting bonus as per health scheme. The time allowed to make the product. Standard hours is 50. A is taking actual time 30 and B is taking actual time 40. The factory overhead rate is 5 per person. So factory cost comes out to be 3490 and 3600. So first we will have material cost, which we don't know what it is. Let's say X. Then we will have wages. So wages for A under row 1 plan would be 30 into Y. Let's say Y is the hourly rate plus a bonus. Bonus would be 20 by 50. That's the time saved multiplied by actual wages. For health, say material will be X, wages will be 40Y plus time saved for B is 10 hours. So half of 10, 5Y. So here the wages comes out to be 42Y. Here the wages comes out to be 45Y. And overheads are at the rate of 5 rupee per hour's actual work. So 30 hours, 40 hours. A will take 150. For B, it is 40 into 5, 200. So when you will add the two, you will get the factory cost, which is 3490 and 3600. So you get two equations, X plus 42Y plus 150 is equivalent to 3490. And the second equation is X plus 45Y plus 200 is equivalent to 3600. So when you will solve the two equations, you will get 3Y is equal to something, which you will solve for Y, and you'll get the hourly rate. So normal wage rate is there. Then when you will put the value of Y in the equation, you will find out the cost of material, and you can prepare a small cost sheet up to factory cost for products made by the two workers. Okay. Another question. Skilled worker in XYZ is paid a guaranteed wage rate of 30 per hour, and the standard time is 4 hours. Hourly rate is 30 per hour. B, a machine man has been paid wages under the row 1 plan, and his effective rate is 37.5 per hour. So he has been able to earn a bonus of 7.5 per hour. First, you will have to find out, that means actual time taken or actual hours is equal to what. So if he is under Raven plan, let's say actual hours is equal to X, he must have been paid 30X plus time save would be 4 minus X upon standard time is 4 into 30X. And if the whole is divided by X, the total hours, this comes out to be 37.5. So if we'll solve this, it will become 30x plus 4 minus x upon 4 into 30x is equal to 37.5x. This x here. We can divide the whole equation by x. Finally, we will be left with, I'm moving here, 30 plus 4 minus x on 4 into 30 is equal to 37.5. So when you will solve this, 60 minus 37.5 is equal to 7.5x. 22.5 is equal to 7.5x. So x will be equal to 3 hours. So when you will calculate the earnings under Halsey, 3 into 30, 90 plus 1 hour saved. So 15. 90 plus 15, 105 he will get. Okay. So anything specific you want from me from labor or material, I will just pick up that. Otherwise, this is, I tried to cover up most of the things as a revisionary part in material and labor. Okay. Any other question? I hope it was productive and there was a quick revision for you for both the material and employee cost. All right, then we can end up this session. Uh, Thank you so much, all of you. Thank you.